Hey, Advisor Nation. Before we dive in, please follow and subscribe so you never miss an episode. Now, I'd like to give a huge thank you today to our sponsor, Dr. Bradley Nelson. He's a New York Times bestselling author of The Emotion Code and the Body Code. Dr. Nelson, we're grateful for your continued support of our show. Now, today I'm really excited because on today's show, we are thrilled to have Armani. She is the founder of the Armani Group, a statistic, financial, and fractional CFO partner for startups and growth stage companies. Now, Marnie, would you say hello and tell everybody a little about yourself?
Hi, nice to have. Thank you for inviting me to the show, Stacy. Armine Alajian, I'm a CPA. I started my own firm almost 9 years ago, Alajian Group, and we provide accounting services, fractional CFO, consulting, tax, anything under the accounting umbrella. And I've been doing accounting my entire life, so it was the natural next step, and love what we do.
Now, a lot of people, they wonder about the rise of the fractional CFO. And, how does that, can you explain that to people? Like, what exactly is the CFO and why it's so important? And explain about the rise of it, why people are really grasping onto it now?
It starts with a lot of startups because startups are raising money and they go to venture capitalists or banks and they need money, but they're creative, they're entrepreneurs, they don't really have financial model or what to do. So CFO, right? It's the numbers, it's the head of accounting, but it comes in different levels. There's CFO where you're just like the CFO inside the company, the director of everything accounting, and then there's the capital markets where you go out and you raise funds. So there's that confusion. They're two separate people. Depending on the size, the same person can do it, but the bigger you grow, usually there's one that just goes out to market and gets the funding, and then there's one that manages the FP&A, the accounting, the audit, the tax, like all of that umbrella. So
Right.
what we do, we work with early stage startups and we provide that service where they're not that big to have their own internal team. And sometimes you don't even need it until like years down the line because then you have to hire employees, there's overhead, there's taxes, there's HR, there's compliance. It has to be in the state. And then you don't know if that person will stay or not. And here we are, we're your team, we're your partner.
Right.
And we know what it looks like, what the investors look for. You're starting a business. Okay, let's put a projection together. Start with first one. What is your vision like? What do you anticipate your revenue? What are you going to do with that money? Right? I need $1 million. Okay, how are you going to spend it? No one's just going to give you $1 million. They want to know how you're going to spend it. And did you actually do what you said you're going to do?
Right.
And having that model is such a key because it's there. You're like, okay, this is my vision. This is what I'll do. Does it always work? No. But then you don't it's interactive. It's a living thing. You don't just build it once and put it away. You have to address it every month, at least quarterly, if not every month, right?
Right.
What happened? This is what I projected what's going to happen. What actually happened? Why? Are we on track? Do we need to adjust something? Is this better? Did the environment change? Did new products come along? Like what? And then you just constantly, just like a child, you're raising a company, you need to have that base. How else do you know?
Right.
But before you do that, you also need accounting. Everybody thinks of accounting as CPA, just taxes. No, let's start with the foundation. Let's
Yeah.
track all your expenses, all your revenue. What's really happening with your business? Not just, oh, I look at my bank account, I have my no, there's all these moving parts. And to give that awareness, here's what it looks like, here's what we're projecting. We need the money. Thank you. Here's how we're spending it and here's what's happening.
Right. And it's so funny that you say that because I hear that so many times. The biggest mistake that most businesses make is that they think of an accountant when it's time to do the taxes, but they don't realize that
Mhm.
any business, in order to survive and to do well, you need to have a good relationship with your accountant, and your accountant has to really be on top of things all year long if you really want to succeed and do well.
Exactly. And it's not just a one-time thing. And if it's just something that should be done in the background. Have an
Right.
accountant. You don't need to, it depends on the business. Some people may need it quarterly just to know what it looks like. Then, so you could strategize for taxes. You're not surprised. You have to do that ahead of time, not after it happens. Even with individuals too. Right? They get a big bonus. They forget that, not even they forget, they don't know. They think what's being withheld is enough. But
Yeah.
just talk to your, and then they blame the accountant. Just talk to your tax preparer. Hey, this is what my year looks like. Do I owe any taxes?
Right.
It's a constant ongoing relationship.
It is. It is. Now,
And a
you
lot
know
of
what?
people are scared. We're
What?
just scared. We're scared to look at it. It's
Oh,
like,
yeah.
I don't touch it. It's in the background. I don't want it. And it's
Well,
natural.
it's natural because sometimes people see that, they're afraid of seeing the numbers, because it might not be numbers that they like, or, it might mean that they have to, take the initiative and start doing things differently. And
Mm.
a lot of people don't like change. They fear it.
They fear it. And one more thing I want to add, where they do listen to marketing, to sales, they listen to everything they say and they look at like, well, this is what my AR looks like. This is what my sales look like, but there's so much more. How much are you spending in advertisement to get you that sales? Are we calculating that?
Exactly.
Like,
Ex-
what's the real bottom line with the overhead, with all expenses?
yes,
That's
yes.
not a pleasant conversation.
No, because a lot of
Blows
times,
up the marketing bubble.
yeah, it is a marketing bubble because sometimes people they're looking at the profit. Oh, I did good and this and that, but they're not looking at the actual expenses that they actually paid. And once they deduct that from the from the profit, it might not be as good as they think. So they
Right.
like you said, changes need to be made sometimes.
And
It's so
so you don't run out of cash, just at least an 18 months, 12 months, 18 months. Let's start with that. And then we keep on moving.
exactly. Now, AI has been, it's starting to like really take over in so many different areas of business. How is AI shaping finance and decision making?
AI is great. It's a tool.
Hmm.
It's just a tool that makes things faster, cleaner, more efficient, less prone to mistakes. And it's just like when the calculator came, all right? You have a calculator, you don't have to do it by hand, then it's Excel. So it's just tools that we as accountants use to help us with the work. And
Right,
it's smart, it integrates where unnecessary time is being spent on admin things or just to bring in the data where you have all of it so you could look at it more strategically and start to do the actual work and to make decisions.
right, exactly. I think sometimes people rely too much on AI when, like you said, it's just a tool.
It's a tool and you need to know how to use it.
Exactly, exactly. Now, what problems signal it's time to hire a fractional CFO instead of a full-time executive?
Oh, from the inception, hire a fractional CFO. And as your business grows, if all of a sudden you have 1,000 people in your company, then we just need more people. That
Yeah,
one person can't support all the hours in the day is not enough for that person can't support. So maybe then we hire somebody internally. Then
right.
you hire two or three people doing different roles. And then sometimes when it's a bigger company, there's compliance and
Hmm.
rules where you have to have an employee if you're about to go public or something like that. So to start with fractional CFO, they
Yeah,
could lead you for many years. And as your company changes, they change. They have the experience, they have the knowledge, the expertise, and they're there to stay, right? You
right,
don't have to worry about looking for a new employee.
right. That's so true. Now, how does this model give founders top tier expertise without the overhead? And how do costs typically compare?
Well, with overhead, you're not, it's, they're contractors. So
Hmm.
you could, it's at will, depending on your contract. You could leave, you could let them go. You're not responsible for payroll taxes, for benefits, insurance, state compliance, HR stuff, the political. things are the corporate political things are not there. You're just there to do the job based on your ability and you have the best interest of the company and it becomes a partnership.
Right, right. That's so true. Now, walk us through the first 90 days. What would you access? What would you fix and what wins founders usually see?
To start, you build that model, right? Just that basic model. Well, what does this look like? What does revenue look like?
Right.
And it's like I said, it's interactive. So you build, oh yeah, what if we do this? What does it look like? So it's like we use tools
Yeah.
that give us that information. So you start with that. Then you like, okay, this is what I need. I need $5 million.
Right.
Then you build a pitch deck, you go to investors and you start shopping around. And when you go with that information, they ask you questions. You already know the answers. Or you could come back and like, oh, they're all saying that way. Let's now, instead of rebuilding, let's just change the model and see what that looks like.
Right. Right. Now, when it comes to fundraising, what type of impact, like how does a fractional CFO tighten the story, the metrics and the data room?
It's numbers. It's numbers and it's actual data. It's not um they are projections, but projections based on calculated, educated estimates. It's not
Right.
like, oh, I want this. Okay, what does it look like, right? This is how much
Right.
it costs. I talked to this vendor, this is what they quoted me. If I
Right.
want to make this product, this is what it costs. So you have all that data there, and
Yeah.
it's data, it's facts. So then you have all that data to um, put it all together to go to the investors.
And when it comes to cash flow and and runaway, like your go-to levelers for stabilize and burn while preserving growth, can you tell us a little about that and explain, how people can really help, their business?
Before you start, or if you start, cash flow is needed, whether it's debt, whether it's your own equity, whether it's you raise equity, you need to know when you will run out of cash. A lot of businesses, startups close because they run out of cash.
Yeah, it's true.
And if you do have that projection, if you do your monthly accounting, then you're always aligned. You always know, like, okay, this is what it looks like. Let's change something.
Right.
Add
Exactly.
something. Or let's pause for now. Yes, I want to open 5 locations, but maybe not right now. Let's just make sure this one can. I think a lot of them just get excited and it should be and jump ahead instead of like, let's just stay here for now. We don't need
Yeah.
5 locations
I agree
yet.
with you. I see that a lot too. And, they start to do really well and then all of a sudden they want to expand and, some expand
Mhm.
to two and three and four. And then, they can't focus, 100% on the one. And, they're not really looking at the numbers as well as they should. And they're not really seeing the differences. And, so then it becomes unstable and then the
Right.
businesses start to fail.
And you want to build in some contingencies, right? What if this happens? What if there's a natural disaster? Something?
Exactly. Exactly. Now, what are the biggest mistakes you see when companies try to scale without senior finance guidance?
Um, they run out of cash.
Hmm.
They they focus mainly on
Mm,
sales and marketing, what those numbers look like.
yeah.
Because if your sales goes up, then your expenses go up.
Yeah.
So they have to kind of move together and just not thinking about accounting and finance as priority. Like
Yeah.
it's the foundation. It just needs to be there.
Yeah.
Don't try not to do it or if it's late where you're just cleaning up
Yeah.
and you find all kinds of things where, oh, you owed all this in taxes or this, and then they get tax penalties and it just becomes messy. And it's so messy it's hard to get out of it or it takes longer and takes more money.
And that's true. All you so it's for when it comes to so many businesses, you hear, marketing, 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 sales, sales,
That's
sales.
all you hear.
That's all you hear. And people talking about scaling and doing this and making this much money and making that much money. But when do you really hear about accounting? And, numbers is everything,
Yeah, never. Nobody wants to really look at that because it's not shiny and fun. Marketing and engineering is, and engineering, a lot of companies start building, and it's so expensive.
Yeah, yeah,
It's always over the budget.
yeah.
Does it
It's
need
true.
to be?
I think if they looked at their numbers, they would figure out a way there that they didn't have to be, or they could be financially able to sustain the amount of expenses.
Right. And we all need to work as a team, accounting, law, HR, or the founder, or the engineers. Like we all need to work together. No, the accountants are the last to know.
Yeah,
You see something, you're like, what is this? Oh yeah, I hired Bob because blah blah blah. But it's
yeah, it's true. It's true. Now, what AI tools or categories does bookkeeping automation and predictive and analytics and reporting, are they worth the founder's time today?
no, not the founders, accountants' time. Yes, the founders should not be busy with that.
Right,
Us as accountants, every time something new comes up, there's a learning curve. You have to train, you have to know how to use it. You know if something's not working right, you as an accountant, you know because you know what it should look like. But a founder
right,
wouldn't. Just like I wouldn't know if I'm doing surgery, if it's not go, I wouldn't know. And that's not what I do. They shouldn't be, no, hire people that know what they're doing. You
right.
do, you do best.
Exactly, exactly. Now, how can leaders avoid getting lost in dashboards and keeping strategy front and center?
See what works for you. Some people like words, some people like charts, some people like numbers. Like what works for you? What report do you want to see so you could look, comprehend it, and like, okay, this is what I need to do for my business.
Yeah,
Don't don't get into making them. Don't get just have that report in front of you monthly. Okay, this is what it looks like. And whatever report style works for you.
right. And I think that's really a really good point because you see a lot of people like pointing out you should do it this way, you should have, have it done this way, but it's really what works for you, because you have
Mhm.
different types of people and certain things work better than, others, for other individuals. And it's really, as long as you're getting the right information and you're absorbing it, and you're understanding it, and you could use it in a resourceful way, it doesn't matter how you do it, as long as you get the information that you should get in order to help you in your company.
Right.
Now, when it comes to data hygiene and risk, what should teams watch out for, like privacy, accuracy, hallucinations?
Oh, there's so much out there. Cybersecurity,
Hmm.
I would say secure your data,
Yeah,
whatever that looks like, passwords or, cybersecurity is a must. The emails, so much gets hacked right now, or you'll get an email, hey, can you send this wire? And it looks so real. Sometimes it's very hard to tell what's real and what's not. And just to
yeah,
like step away and not really act on it.
right. I've seen that happen to so many
I
people
see
because
it so
it
many times.
looks so real. And so many people have been, you hear horror stories about situations like
Mhm.
that.
Or the IRS calls, or somebody like, no, let's just pause, step back,
Yeah,
ask someone,
exactly. Exactly.
or just take some time and analyze, like, is this a vendor? Like, what's happening?
Exactly.
Unfortunately, it's every day. This happens every day.
Yeah. Yeah, unfortunately it does. Yeah, you have to be savvy and you have to be really on your toes about it and
Hmm.
and double check everything. Just
Hmm.
don't jump into it because and let your emotions get the best of you.
Right. That's why all of this is it's constant work. You always have to be plugged in, doing the work on top of things.
Yeah, 100%. Now, a quick framework for choosing tools that actually save time and improve decisions. What are some that you could recommend?
Tools. So for us, QuickBooks is the main tool. That's the
Hmm.
GL system. There's it's QuickBooks, whether it's NetSuite, QuickBooks, Zero, some sort of a GL system. And there are so many tools. If you hear it promises you the world to fix all your problems, but they're all just tools in addition to
Yeah.
they're plugins to QuickBooks. These are the tools that I would use because
Hmm.
QuickBooks is the main one, but we need an accounts payable receivable system. We need an HR system. We need payroll system, right? We need all these different tools to plug into the main tool.
Right.
You can't just use this or this. You need these to plug into to QuickBooks. And I'm
That's
talking about startups companies. I'm not talking about somebody individually who just wants to send invoices.
right.
There's so much out there. You just need to know what's right for you. And we do look at so many tools. We try, we test. Every company needs different ones, uses different ones, benefits. And as new things come up, you start looking like, oh, what could this do that could be better?
Right. Exactly. Now, one weekly operating Canvas like reports or metrics that gives founders clarity fast. What would you suggest?
Cash. The accounting reports, the balance sheet, the P&L, they're proper. It's a lot. I usually make a cash sheet, just pure
Mhm.
cash. Cash in, cash out, projection. What does our cash look like?
Right, right.
That's
That
one
should
tool
be,
that's not there that could
yeah.
really, truly help you sculpt your cash situation.
Oh, I agree with you 100%. Now, if a founder did just three things this month to up level their finance, what would you recommend those three things?
Have clean books, have
Hmm.
books, clean books. Be compliant. Every state, there's so many taxes, licenses, and then you hear, oh, this deal didn't go through because I'm not active in California. They just don't know. So
Yeah,
that's a big one. And continue, just keep on doing. It's not a one-time thing. Continue constantly.
right, right. Now, if you had to like really think about some of the most important things that we've discussed today, and you really want to, what would you emphasize to the listeners today that you would want them to walk away with and remember from this conversation?
Have an accountant. Start to work with one. It doesn't need to be daily or monthly. Just have that partnership and that relationship.
Right. That's so good. Now, could you tell everybody a little bit about the services that you provide?
Yes, so we provide full accounting services where starting from bookkeeping all the way to financial statements, um, due diligence, working with startups and their audit readiness, APAR, payroll, projections, budgets, all of that. Then we have advisory,
Hmm.
where we work with bigger companies when they need an extra hand or a specific project.
Right.
It's a one-time project. Those are usually monthly retainer, right? We're the external accounting department.
Yeah.
That's who we are. And then we have taxes,
Hmm.
individual business taxes, compliance, everything in that umbrella. And what's nice is when we do the accounting, we do the taxes, everything's in-house and we see our full picture. We're not going here and there. And as well as business management, which
Right.
is accounting for a specific industry, the entertainment industry. They have different needs and it's a different industry, but it's accounting for them. It's called business management.
I like that. I like that a lot. Now, where can people find you? If they wanted to find you, where would they go to?
On my website, alajiangroup.com, or email me info@Alajian Group. And our website also has guides, references, what else do we have? We have a lot of useful materials over there that people can just, we have a client portal, everything is secure and you have a portal, so on our website.
Wonderful. Now, if you could you spell Alajian for everybody so they know how to spell Alajian
Of
Group?
course. Alajian.
Okay, perfect. And I'll put that in the description also for
Thank you.
everybody. This has been amazing, and I just want to thank you so much for coming on the show today. Is there anything else that you'd like to bring up before we go?
Yes, one more thing. So everything we talked about was focused on US entities, US corporations, but there's so many international and foreign companies that do business with US.
Yes, that's true.
And in order to do business, you have to create a corporation here. So we do a lot of that as well, where we have companies overseas that
Hmm.
come to US and they don't know the rules and laws and what it takes. Like, so we're their partner, we do the accounting, we're their business partner.
Right. I love it. I love it. Well, this has been amazing. I thank you so much for coming on the show and sharing your
Thank
knowledge
you.
with
Thank you
us,
for
you
having
know.
me.
And we're coming close now. People are putting together their numbers for taxes, and like we
Oh,
mentioned, it's not
yes.
taxes also, but it's everyday, things that are going on in the business as well. So, people like yourself, it's very important that, people really start to contact you and contact, someone that could really help them, because without, everything is numbers. Everything is
Yes.
numbers, when it
Hmm.
all comes down to it. And so I really thank you for sharing a lot of your advice and your wisdom today and helping people because I think people don't think enough about accounting and enough about
Hmm.
numbers, how it affects businesses. That's what it's all about when you really think about it.
The
You
health
know,
of the company. Right. It's a
it's
scorecard.
exactly, exactly. So I thank you so much for coming on this show and I really appreciate you so much.
Thank you. Thank you so much.
You have a great day.
You too.